Friday was a bad day for the market and bad for my portfolio. Let's take a look at this week's distributions and how my high yield ETFs held up this week. Also, YieldMax made a major announcement that involves MSTY and SNOY, so stay tuned. I'm on the hunt for an infinite stream of dividend income, and it begins with my plan to turn $1,000 of Robinhood's money into $1,000 of my money. Let's start off with dividends. As usual, I got NIVI and COI this week. NIVI paid me about 45.5 cents per share for a total of $4.62. It was nice to see that this distribution amount rose a little bit compared to last week. Now we've got 3 weeks in a row of slightly increasing dividends, which reversed a trend of continuously downward dividends. The payout I received on October 7th represents about 100% yield, which is fantastic. COI paid me 53 cents, which was a tremendous drop-off from last week's highs. This was only a grand total of $2.44 and continues its really erratic behavior when it comes to distributions. When this came out, it was equivalent to about a 62% distribution rate, which is lower than what I'm looking for. As always, I took half of the dividends for each of these funds and reinvested it back in the fund. The other half went into SPY. Because I've been receiving weekly dividends, I've made a ton of small micro purchases of SPY. As you can see, most of the purchases are a tenth or less of a share, but they add up. I've done so many of them that I'm up to over 1.5 shares at a cost basis of $79.62. This experiment has only been going on for a little over 2 months, so I'm pretty impressed with that. And now for the bad news. The stock market took a beating on Friday, and so did my portfolio. It's only down about 2.25%, but that's mostly thanks to PAAA. It was only down less than 0.5%, and it's doing exactly what I bought it to do. It's acting as an anchor for the portfolio to keep the values from drifting too far off. As you can see, my high yield ETFs did not have a good day. COI by itself was down 12.5% just on Friday. I dropped right back down into the high risk territory. The portfolio maintenance is just under 5%, so that puts me in the high risk category. Really, I'm only a couple of dollars from the 5% threshold, which would immediately put me back into the low risk. I just think it's weird that that's how they differentiate their risk categories. Under 5% is high risk, over 5% is low risk. That seems pretty aggressive to me. In a big portfolio, I would think a 5% buffer would be way too scary. Quickly, I just wanted to show you what the margin maintenance requirements are on the portfolio right now. Total of only $160. But remember, this doesn't really apply to my portfolio because my portfolio is really concerned with the $2,000 Robinhood minimum margin account balance. Margin maintenance becomes a lot more of a concern for bigger accounts. For the week, the portfolio was down about 3%. NIVI tracked right with the portfolio, also down a little less than 3%. MSTY had a bad week, down about 12.5%. The drop-off on Friday was substantial, but there was also a big drop-off earlier this week. SNOY was down about 3.5% too. It rallied during the middle of the week, but fell off on Friday with everything else. For COI, this is just Friday's return, down 9% in one day. For the week, it was a little worse, down about 11, almost 12%. Here's a look at how Robinhood views my entire portfolio. Normally, I don't show this screen. The main investing screen you see shows the $2,098.31 because this is my equity, but this view shows the total market value, including my $1,000 of margin used. However, I think this spreadsheet is a better way to summarize the portfolio. My 4 high-yield ETFs combined are down about 15.5% in value. That includes MSTY down over 32% and COI now down at 22%. SNOY is almost even. That's partially countered by my SPY position, which is pure profit, and so it's up $79. When you combine the 4 high-yield ETFs with SPY, the portfolio is down about 7.5%. I don't include the value of PAAA in my total return calculation. Now that we've been over what happened to the portfolio this week, let's turn to the big news out of YieldMax, where they announced they are moving their ETFs to a weekly distribution schedule. The Group 1 ETFs already have weekly distributions as far as I know, and those include some of the titans of YieldMax, such as YMax and Ulti. Group 2 are what's more interesting. These are all of the single stock ETFs, including MSTY and SNOY from my portfolio. So starting next week, they're going to begin paying weekly, declaring on Wednesdays, ex-dividend on Thursdays, and payments every Friday. Here's a look at all of the ETFs and which group they belong to. I think it may take a few weeks for us to see how these distributions are going to look, and that the first week may not be a good indicator. Some of these funds have been accumulating distributions for several weeks, while others just recently paid out. So we may see some high dividends from a few of these ETFs. I'm not sure how practically useful this change will be, but I do think it's a good marketing ploy for YieldMax. Roundhill has come on strong with all of their weekly ETFs, and I suspect YieldMax was feeling a little pressure and wanted to join in with that. People seem to like these weekly distributions. If you're reinvesting the dividends, it does allow you to compound these a little faster, but I'm not sure that that's going to make much of a difference unless you have a really large account. There's been some speculation that this change may help these funds stabilize their NAV. I'm not so sure that's the case. We did see Ulti become more NAV stable when it went to a weekly distribution rate, but there were some other changes in the strategies involved behind the scenes, and I think that was the most important part. I've seen no indication that YieldMax is changing the strategy for these ETFs. The prospectus hasn't changed. I guess it's possible that they may make some minor changes or tweaks as they're trying to figure out the best way to get consistent weekly dividends, and maybe that will be good for the funds, but I don't really see this as a fundamental change. My guess is the distribution rates will stay the same. You'll just be getting it once a week instead of once every 4 weeks. So weekly dividends will certainly be a welcome change for people who are wanting to get their hands on the cash faster or who want quicker compounding if the dividends are reinvested. However, on the other side of the coin, each of these dividends is going to be really small, which may make reinvestment a little less efficient. Seems like it could be more of a record-keeping hassle for the fund, and I hope this doesn't eventually impact their expense ratio. So for me, I don't think this is going to make much of a difference in the return or the value of the fund. I hope it does, but my guess is it won't. I do think it's a smart move as a marketing tool for YieldMax. It generates excitement about their funds and puts them on the same footing with Roundhill. Here's a look at my upcoming dividends. This is going to be a lot busier now that I have SNOY and MSTY coming in every week. So tell me, what do you think about the YieldMax changes? Do you think it'll lead to any type of performance improvement or NAV stability? Let me know in the comments. And if you found this video helpful or entertaining, please hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. If you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. And good luck hunting those infinite dividends. Take care.